Today we're talking about how to make money from online dating, specifically investing in stocks in the space, not catfishing and scamming people. There's basically only two major players in the online dating space, Match Group and then you have Bumble. And together, they pretty much own the entire market share of the online dating space. For this video, I'll be analyzing Bumble stock in more detail, but I'll definitely reference Match Group as the companies are very similar. Bumble Incorporated is the smaller of those two names, and it really comes down to two apps for Bumble, the Bumble app itself as well as Badoo. The Bumble app is mostly known for its dating aspect, but it does also have a Bumble Biz and Bumble BFF, which are more social networking features of the app itself. As for Badoo, it's also a social dating app, but the user base is more international and Bumble is more focused in the US. What used to be a taboo subject is actually now the norm, where more people I know when it comes to friends and family have actually met from online dating versus just meeting naturally in real life. As you'll see by this pie chart, that Tinder is the king of online dating apps globally, but Badoo is a close second. With a similar story for the US dating app market share, where Tinder's king, but Bumble, you can see, has a huge market share of the US. When it comes to Bumble stock, it's currently trading around $37, and year to date, the stock itself has struggled. They IPO'd earlier in the year, right around the hype of IPOs, as well as when the market was very speculative. And since then, it has fallen back down to, I would say, a more reasonable range and a market cap of $7 billion. If we look at the macro environment for online dating, the trend is upwards. We can see based on this infographic that the compound annual growth rate is expected to be 7% through 2027. So not explosive growth, but the market is growing. For a while, Bumble was trading in this $50 range, but with Q3 earnings, it did take quite the fall. From a high level, revenue grew around 24% versus last year to 200 million, and the majority of that was due to Bumble, growing around 39%, whereas Badoo was pretty stagnant and actually declined 3%. The total average revenue per user also grew, and this is once again due to Bumble. In terms of paying users, Bumble had an increase, Badoo lowered the amount of paying users, but across the board, all of the paying users did pay a little bit more. One thing I did notice is the profitability of the company did go slightly down, and my question was, what was causing an increase in costs? It looks like a couple things. Cost of revenue went slightly up as a percentage of revenue. Selling and marketing slightly up, and one that I don't mind seeing going up is the productive development expense being 12% versus 8%. That just means that the company is innovating more, and this may have larger returns later on as it releases new features and the apps become better. One other thing I wanted to point out is if you look at the year-to-date numbers, the net income for this company looks pretty good, but that's because they did have a one-off in income tax benefits of around 335 million. You should probably strip that out because with stocks, it's future looking and this income tax benefit won't always be there. I also went ahead and looked at Match Group's numbers and their Q3 to see how they compared versus Bumble. Match also had solid year-over-year numbers, 25% growth for revenue, and the one big difference between Match Group and Bumble is that Match is profitable. They have a higher EBITDA margin. That really comes down to scale. I mean, we're talking about a company that is around 5 times as large, and with any software company, if the gross margin is similar and Bumble gets to the same size as Match, I would expect the same level of profitability. And actually, when we look at the year-to-date gross margins for both of these companies, they have the exact same gross margin of 72.2%. If we look at the multiples that they're trading at, price to sales ratio, Match has a slightly higher one, which is a bit understandable as they are generating more profits. The PE ratio higher, EV to EBITDA multiple slightly higher, and the growth for revenue as well as free cash flow are similar. Bumble trades at a slight discount in terms of multiples versus Match, and I think part of that is Match is a bit more diversified and is profitable. Let's go ahead and dive into what I think the company should be fairly valued at, as well as the potential for this company going forward. If I use something like a price to sales ratio, I come up with the higher 30s, but if I use something focused more on cash flow, discounting those cash flows back to a present value, that's where I come up with a lower number. You blend those together, and I come around $35 as a fair value. With a growth company, there is a little bit more leeway, especially when it comes to the fair value. If we talk about having the same multiples a year from now, and the company is growing their bottom line as well as their top line, the valuation of that company should also grow. If I'm looking for a year out, the potential potential based on an EV to EBITDA multiple, or if we're talking about a price to sales multiple, I'm talking about 30% or more in upside. While the stock doesn't have a ton of coverage, it does have a moderate buy rating across 7 analysts with an aggregate target of $56.71 a year from now. The biggest risks I see for Bumble is the fact that it is 2 products. If Bumble starts to decelerate in their growth, or Badoo starts to really drag down on the overall performance of the company, that can hurt. The second thing being the lower barrier of entry. A lot of these dating apps are easy to make. If something does come on the market and steal market share, obviously that's not great. What is good about this company is it seems like they're forward-looking and innovative. You're talking about the CEO coming from Tinder and creating an entire app to rival it, and has grown it to this size just based on seeing a need for a new feature or a different experience. In the same way, they're also looking at the metaverse as well as Web 3.0 as another opportunity to expand the platform and really embrace this to give their users a new experience. Another potential opportunity is that this company could get bought out by Match Group, which I don't know if that would get approved, because then we're talking about just one company pretty much owning the entire online dating space. But I was thinking more of a company like Facebook buying something like Bumble in order to get involved in the dating space. I know Facebook also has its own feature around dating, but they could easily just buy Bumble, Badoo, and kind of just integrate it into their service as a pretty easy plug and play. But that's just speculation. Overall, I have been looking to get into the online dating space when it comes to investments, looking at Match Group, looking at Bumble. Around the mid-30s is where I'll probably start to nibble into this position, and a stock that I've been looking at for a while. If you guys did enjoy the video, make sure to hit that like button, as well as consider subscribing to Main Street Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching, and have a great day.